Today, we are discussing rollovers for business startups, or ROBS. In short, ROBS will teach you how to use your retirement funds, tax-deferred, penalty, and debt-free. This innovative resource has become the fastest growing form of funding to help someone start, acquire, or grow a business. Two ROBS experts have created a series of comprehensive educational videos to help you become an educated and successful entrepreneur. The first, Larry Carnell, is the National Award-winning Entrepreneur of the Year, business and franchise expert, and Vice President of Benetrends Financial, the company that discovered this legal pathway in 1983. Carnell is recognized as one of the country's foremost ROBS experts and is credited with helping introduce this creative funding, wealth-building protection program. Joining Carnell is CPA Gary Bodie. Bodie holds a master's degree in accountancy and is considered a leading national expert on ROBS structures. He is also a business lecturer and contributing author on ROBS and C Corporation structures, which can help maximize your exit strategy benefits while minimizing your taxes. In addition, Bodie runs his own practice where he advises and works with entrepreneurs with ROBS-structured businesses across the United States. Today's video is on exit strategies. What are the exit strategies?
A common question we often have, especially people that have been entrepreneurs before, is specifically how do we exit out of the business? What are the exit strategies? Keep in mind, this is a retirement plan investment. So if you invested in Walmart and you sold the Walmart stock, those proceeds would go directly back into the retirement plan. The same thing happens here. There's several options. You can either take the tax hit on the front end, or you can take the net proceeds and move them directly into the retirement plan. Of course, the advantage there is, I believe, the most important thing with what's happening in life, as we've spoken about in earlier videos, is it's not how much wealth you accumulate in life, it's how much you protect. We have the ability to live much longer than we ever did before. It's just a question, do we have enough in wealth that's going to be there to maintain our standard of living? That's the tough question today. And so having a vehicle that will allow you to take those proceeds through an exit strategy, move those funds either to allow you to go buy a bigger, better business, or move those funds into a federally protected account for the rest of your life is a distinct advantage that you need to think about at the start of the business. These programs don't work well if you start the business and then you're trying to move retirement funds into the business, because you could actually be incurring some taxable events. What do you think? What other comments do you have about that?
Well, again, tangentially, I can say that almost every client asks me how they can turn into an S corporation, and I explain to them that that's not really an exit strategy for various reasons, and then kind of go in and sort of let them know that they can transfer it back into the retirement plan. So there really is no tax at the exit point if you design it right.
And the other thing is, what people don't understand is you always have the ability, if you ever have a situation where you're starting to have double taxation issues, if you're working with a design company, they can design plans that will provide you better protection where you should never have to convert. But here's the other problem with converting. In addition to having to buy back all your stock at fair market value, I've had people that started businesses at $100,000 when they got ready to convert, it was worth over $500,000. To be quite honest, not a lot of small business owners have $500,000 laying around.
Of course not.
If they had that money, they would be expanding their business. But when you do that, you are actually then taking the protection away from the retirement plan. It can often become a personal asset. Now you're exposed to liability, personal liability issues. So for that reason, a lot of people don't do that. But these are exit strategies people talk about. In general, when the business is sold, we can take much of these proceeds, move it directly into the retirement plan, pre-tax, to either buy a bigger, better business or into a vehicle where it's protected for the rest of your life.
Well, a lot of people are now also asking me about passing the business on to their kids. I mean, this year, there's really been sort of an emphasis, I want to leave my kids something, and what better way to leave them is with a successful business, that's so protected. So that's something that's really, I hear more and more, maybe in the last couple of years.
Well, legacy is a big thing for a lot of parents. Well, our next video, ROBS 13, will be specifically talking about IRS
Okay.
concerns,
Okay.
the IRS alert memorandum and compliance issues.
Okay.